Big downward revisions in growth and a change in the national minimum wage, and also the abandonment of a surplus to government budgets by the turn of the decade. Chris Beauchamp is with us now with analysis in the wake of the budget that we've seen. I shouldn't call it a budget, it should be an autumn statement, which of course itself is going to be the last one of its type. The first one delivered by Philip Hammond, though, which is the interesting point here. Effectively, it's a new government. Away we've gone with everything that George Osborne pretty much stood for. What was your takeaway, first of all? Very much a steady as she goes autumn statement, which is what we expected. Really, it is room for manoeuvre, very limited, I think, without losing confidence of markets, if you like. If you look at the measures he's announced, it's some interesting bits like the 23 billion for the innovation fund, the increasing move lower on corporation tax. That's a long-standing policy of the previous government. Also, this sort of move was to push for 5G and get the UK sort of further ahead in the infrastructure space, at least in the tech sphere. So that's the kind of thing. But it is very much just tinkering around the edges of the economy. Let's take a look at a chart. I mean, sterling dollar is one you wanted to look at to begin with. I mean, we were talking about this earlier on, disregarding the fact that it's 20 minutes away from the point of this broadcast. We had a very strong durable goods number, which sort of twisted things a little bit. How has sterling moved in the wake of the announcement? Well, if we look, we can see this is the long-term move for sterling. We've seen the summer drop, and then we've been pushing steadily lower over the last few days. In fact, since mid-November, back down from that 50-day moving average. If you look at the hourly chart, we can see sort of what we've been watching over the last few days. And we had, if you look at these last couple of hours, we did have a rally on the announcement of the autumn statement when he began to speak, if you like. And then, as you mentioned, that durable goods number, way ahead of expectations. I think that just underlines the point here that the dollar is driving FX markets at the moment. It's not what Phil Hammond says, unfortunately, much as we'd like it to be. It is what happens in the US. And such a big number has meant that that long rally we've had of the dollar index since the election has just been stepped up again, even with Thanksgiving looming tomorrow. So I think the direction of travel for the pound remains lower, and the blunt fact really is that what happens to the UK and of course the pound really lies now in what happens with Brexit negotiations, and that's beyond his control by and large. Well, let's take a look at euro sterling then in that case, because obviously the relationship with Europe is going to be changed ultimately, assuming it all goes through as expected as per the referendum, when the majority of people said that they wanted a divorce from the EU. We know as well that on the other side of the euro, any of the euro crosses, we've got to consider the fact that the eurozone itself and the EU is finding it going very tough economically. Yeah, if we look at the euro sterling, this has been in a longer term uptrend, and that's been obviously being kicked into high gear because of the weakness in sterling. You can see that big spike we had on that night when the pound had its mini flash crash, if you want to call it that. Now, we find ourselves here. Now, essentially we've seen another big dip in this long rally. So actually, maybe it's time for another bout of euro strength. So I think it's more a case of perhaps pound weakness, shall we say, sterling weakness. Certainly if we look at the hourly chart, again, you can just see how this big decline over the last few days, that we had all the way through sort of November, has really come to a halt, I think it's fair to say. We've certainly been building a base above 85 pence. On this particular currency pair. So as long as that holds, if we go back to the daily chart, you might argue that this uptrend might be about to kick in to another gear. So I think it's definitely one to look out for, really, that we now get another move high here, continuing what has been a very strong trend over the last few months. Yep. Okay. All right, Chris, thanks so much indeed. That's taking a look at the aftermath of the autumn statement delivered by Philip Hammond, but as Chris was saying, interrupted to some degree by a very strong durable goods number, which could well underscore the need for an interest rate rise from the Fed when it meets mid-December.